Hello everyone. Good morning, good afternoon, or good evening to everyone who is watching at this moment, wherever you are currently. Welcome to my Market Talk episode 1, where we discuss what is trending and what is upcoming in the latest market buzz. So, what do I mean by that? Market buzz will be, for example, when Fed announce a certain macro perspectives that we feel will be impactful to our portfolio. We'll discuss it during my market talk episodes, and also company specific special situations where we feel there's a need to be discussed during this market talk session will be brought up as well from time to time. Okay, so today we will talk about earnings season, which is coming up again, where most companies will announce their second quarter or third quarter 2023 earnings during this period. However, I like to say that I do not particularly make huge decisions on my existing portfolio positions during such seasons, unless there is a compelling need to do so. Okay, because as a value investor, my horizon is usually 5 years and above. So the purpose of this is to actually monitor my portfolio companies that I own each quarter, just to ensure they are on track and to hit its long-term goals and visions. Okay. So as you can see here, earnings seasons have kicked in since mid-July. Okay, and then this week will be particularly a little bit quieter, and then it will, as the time approaches to the end of the month until August, it will become heavier. Okay, so you can see next week, for example, on Tuesday, there will be 300 companies announcing their earnings, and then Wednesday will be 500, and then going forward Thursday will be 800. So particularly next week will be a busy week, all right, for the markets to digest all the earnings. So big banks have already announced their earnings. For example, Bank of America and JP Morgan have already announced their results last week, and both have beat street estimates. And that created a mini upbeat rally last week up until this week. But today, however, seems a bit muted, okay, due to disappointing outlook by, I think, Tesla. Tesla have actually announced their earnings, and then some other companies also have fall short of street estimates in terms of their outlook. So we will see more big tech announcing their results end July to early August. Okay. So we can see that American Express, these are the companies I actually hold. Okay. So American Express will be announcing their second quarter on the 21st of July, where the street estimates earnings per share is currently at 2.82. Okay, for Google second quarter will be 26th July. The street estimates is around 1.34 for the earnings per share. And then after the Apple will be on the third. Apple will announce its third quarter on 8th of August. Estimates for the earnings per share is 1.19. And then below, I think you can see that there's actually Stone Co, which is a fintech company. It's a payments gateway company. It will announce their second quarter earnings on the 16th of August, where the street estimates is around 18 cents. Okay. So I'd just like to actually conclude that I do not actually hold too much weight on such street estimates by analysts. But it's actually quite unfortunate that market takes a serious view on these estimates, and the market is actually quite sensitive to analysts estimates, where if earnings actually were to fall short, the market will punish these stocks or these companies, and then if they beats estimates, uh, the share price will go up. So this is where actually we as value investors will come in to hunt for good deals, because of we look at a longer term period, not so much of the short term. But the market actually affects the whatever the analyst actually estimates do affect short term movements on the stock prices. So this is where we actually have opportunities to hunt for good deals. All right. So I like to bring back again, my focus is to usually to focus on the core fundamentals that hold the long-term goals of the company in place. So this long-term goal should derive the future value of the business. So most of the time I watch quarterlies is just to understand what the CEOs have actually have in place in terms of the strategies in the near term that can drive its long-term goals. So it's sort of like taking baby steps to actually grow the company towards its long-term vision. So this is why I feel that I place strong importance in looking at quarterlies instead of actually looking at quarterlies just because we want to try to beat analyst estimates, which is very difficult to do because I don't think that we can actually even predict what is going to happen in the near term interest rates, for example, let alone uh, estimate what is going to happen to the company in the near term. So, like what Benjamin Graham always says, that I always put it deep in my heart uh, that the stock market is actually a weighing machine in the long run, but in the short run, it's actually a voting machine. So let the market weigh the results instead rather than vote, because by voting I feel it's very speculative. So weighing it is a better gauge of the value of a good fundamentally good business. All right, so let's see what the market does today, and we'll catch up again soon, right, with more market topic bites. All right, good luck guys, and for the win, stay strong, stay safe, and let's make more money. See you guys.